Hi all, and welcome back to the channel. Today is April 27th, and today we are talking about a stock that is trending today. Poet Technologies just had one of the most brutal single-day drops we've seen in a long time. The stock fell nearly 50% in one session, and it's now trading around $8 per share. If you're holding this stock, or even just watching it, you're probably asking one simple question. What just happened? This was not an earnings miss. It wasn't a market-wide crash, and it wasn't some hidden scandal. So in this video, I'm going to explain exactly why Poet collapsed, what actually changed, what didn't change, and whether this stock is finished, or if this was a massive overreaction. Let's break it down in plain English. First, what is Poet? Poet Technologies is a small-cap tech company focused on photonics and optical interposer technology. In simple terms, they build advanced components that help move massive amounts of data extremely fast. Their technology is mainly used in data centers, AI workloads, and high-speed computing. Poet doesn't sell phones or software to consumers. They sell technology to other tech companies through partnerships and future production orders. That's important to understand, because Poet's stock doesn't trade on steady revenue. It trades on expectations about future growth. And that leads us directly to what caused the crash. The drop was triggered by one key piece of news. One of Poet's major customers canceled purchase commitments tied to Poet's technology. That customer was Marvel. Once this became public, investors immediately reassessed Poet's future revenue outlook. And this is the point where price targets matter, because when expectations change, valuations change with them. Right now, Poet is trading around $8 per share. In a bear case, where Poet fails to replace that lost business and uncertainty continues, the stock could fall into the $4 to $5 range. In a base case, panic selling fades, volatility cools off, and the stock stabilizes somewhere between $7 and $9 as investors wait for updates. And in a bull case, where Poet secures new partnerships and restores confidence, the stock could recover into the $12 to $15 range over time. These aren't predictions, they're scenarios, and which one plays out depends entirely on what the company does next. Now let's go back to the news itself. This was not a product failure. Poet did not say their technology doesn't work. This was not a fraud being exposed. This was a commercial and contractual issue. Because Poet is a small company, losing one major expected order has a massive impact. There isn't a long list of other customers to instantly replace that revenue. Now let's answer the big question. Why did the stock drop nearly 50% instead of 10 or 15? There are several reasons. First, Poet is a small-cap stock. Small-cap stocks move fast because there aren't enough buyers to absorb heavy selling. Second, expectations were high. The valuation was based on future growth that suddenly became much less certain. Third, stop-loss orders kicked in. As the stock started falling, automatic sell orders accelerated the decline. And fourth, momentum traders exited. Many people weren't long-term investors. They were there for the trend. Once the trend broke, they sold. Put all of that together, and you get a waterfall effect. This wasn't one bad seller. It was everyone rushing for the exit at the same time. Now here's what did not change, and this is very important. Poet's technology still exists. Their patents didn't disappear. The company did not go bankrupt. Their engineers didn't suddenly forget how to build the product. What changed was confidence in near-term revenue. Now let's talk honestly about the bear case. The biggest issue is customer concentration. If one customer can cause this much damage, that's a real risk. There's also trust damage. Losing a major commercial relationship can affect future partnerships. Then there's funding risk. If revenue is delayed long enough, Poet may need to raise capital, and that could mean dilution. And finally, volatility. Once a stock drops this hard, investors demand a lower valuation to compensate for risk. This stock is not going back to being calm and stable anytime soon. Now let's talk about the bull case. The sell-off may have overshot to the downside. Markets often overreact, especially with small-cap stocks. The core technology was not invalidated. This wasn't a failed product or broken platform. Poet still operates in AI, data centers, and high-speed networking, all long-term growth areas. And historically, some of the strongest rebounds in the market happen after panic selling, not during. Hype. That doesn't mean Poet will recover. It means the risk-reward profile has changed. So here's the bottom line. Poet didn't crash because the company imploded. It crashed because expectations collided with unexpected reality. That doesn't make it safe, but it doesn't automatically make it dead. If you're emotional, this stock will punish you. If you're patient and disciplined, it becomes interesting. The real question is simple. Can Poet replace what it lost? And how long will that take? That's what the next few quarters will tell us.